Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It is March 12th. This will be our chart lesson for the day, and this was an interesting day. We started out, it looked like it was going to be another spike in channel, which I believe it is. It spikes up. I adjusted this channel a little bit. Originally, I had my midline, or I had the midline right here, thinking that was the upper side, and then looking for a possible measured move an equal distance up across here. But as the day went on, as you can see, this turns out to be the high, and this is just a midline through right through here. So, um, but even then, what made this day a little bit more difficult was we started out in this two-tiered spiking channel, and you can see it's really in play until maybe about right here, and then of course you want to watch for your resistance up here, and then as the day progressed, you can see it was a two-tiered trading range. And really, this was your support area, this was your resistance area, and this was your midline. And you can see we worked that midline most of the day. Really, this afternoon we worked till 2 o'clock. We worked the high side of that midline, that range, until we finally dropped through, and we got a little break below, and then got back inside and started working it again. So um, this makes it a little more difficult because you're expecting prices from here to go back to here. When they don't get there and they just start going sideways, that's when it gets really tough to trade. I've got a couple more trades in the afternoon, not many, because this is almost impossible to trade here. And I'll explain the ones that I do have marked. But this is really hard to trade. There's just not much movement there, and you just get whipsawed in every direction. For the most part, you're better off probably to stay out. Um, Obviously, entering here on a failed break higher is not a bad move at all, especially with this little trend line. You're moving up, you get a break, move to a new high, and then a big bearish bar, and head it back down. So you would figure at least coming back to the midline. You see we danced across it for a little while before prices fell on down again. And so this is not an easy day to trade. Uh, you really couldn't probably find. I mean, up until we came up short here, you had to be thinking this is a two-tiered channel working higher. When we came up short here, then you got to wonder what's going on. Are we about to reverse or get a break or whatever? And we end up just going sideways all day. So really, once we came back here again, you should have had your line across here when we made this lower high just to see what happens. And we could have pushed on up, but maybe we don't. And you can see that turns out working. And notice too where prices are right this minute. This is today's price line. It's right on that midline. For whatever reason, these areas will be important the following trading day. Always look for your highs, lows of the days, and your closing from the previous day. For whatever reason, those are always important price levels, and you'll see stuff happen there again the next day. So it's something I do kind of keep an eye on. Um, you don't want to trade off that alone, but you might watch for things to happen in those areas. So notice I got another little line that I had drawn right across here and kept in there. I just wasn't sure when we were working back down here what was going on, so I found the biggest support area. But by the time we got across here and went back up here again, then it was pretty obvious kind of then what was happening. So this is when it was really, when we shot back up here and turned down here again, that's what kind of made it obvious that we were stuck going sideways now. Till then, it was kind of hard to know exactly what was going on, why we weren't getting to the highs, and why we're kind of dancing across this area right here. Well, there's a midline on a trading range right there, and that's why we were dancing across there. Anyway, let's back out, talk about our trade. 7 o'clock came moving up through here, and you had to be a little patient. And notice we're working up. We tried to go higher once. We pull back, and you get a second entry long when it broke above this bar. That's tempting to go long, but notice that 2-bar matching high there, and by that time you got about 4 bars stacked up. If you did go long there, when this next bar closed like it did, and then the next one too, and then suddenly you get a next one, I probably would have exited that. It was obvious something's going on there. We may be going to retest this low. And so this could be just a trading range day at this point. So you had to be careful of that. Um, Once you had these two, this low here, I'd be trying to draw my trend lines across there. Really wasn't real obvious until we came back right here. You do confirm it right here, but that's more sideways than it is up. Um, but when it came across here, that really confirmed it. And when it bounced here again, you definitely had it confirmed. So um, there is a second entry short right here. I probably wouldn't take anything long here with these 2-bar matching highs and um, 1, 2, 3, 4 bars stacked up. But if you did go long there, when it broke higher and gives you a setup for a second entry short, I'd probably take it because generally you get this leg and then you get a two-legged correction, and I'd look for a second leg. It's not quite a measured leg. You can see the first leg right there. There's the second leg. So we didn't get a measured leg, but you got a two-legged correction all the same, and then we went higher again. And at that point, I would be looking for a possible measured leg high like that. And you can see we got pretty close to that before it was over. We actually went a little higher than that. You can see we went a couple of points higher than that. We got up to 2803, and the target would have been 2801. So just something else to look at there. Just remember the market moves in twos, and so when it starts whipsawing like this, you're really better off to stay out. I might have taken that long there. That's interesting, but those 2-bar matching highs, with that being a down bar and this being an up bar, and that makes it a little bit questionable, especially when we're making lower highs, and this high is lower than that high too. And so when we're making another lower high, you got to be thinking a leg down right here. So if you see all that, that would probably keep you out of the long. But if not, I wouldn't be afraid to take that second entry short right there. That's a pretty good setup, and you probably got some longs trapped. But after that, I don't think I would take anything else because this is a little tight trading range, tight congestion area, and you don't, not a very good signal bar off the low. Too close to the highs, nothing really. This is the only really setup off here that you could really take. So once that was past that trade, you just kind of have to sit and watch what's going on there. And of course, you would think on the second leg it would have worked on up, but it didn't. It comes back, makes a higher low, and then it makes a higher high, and then a higher low, and then finally it works its way on up there. So by that time, you could find this two-tiered channel, and it makes it a little clearer what's going on. And it is an upward bias. You can see the EMA, even though we're swinging back and forth, you can generally trade this both ways if you get a good setup. So you do need a good setup. But anyway, then we bounce down here, and this kind of confirms. This is a second entry long off a double bottom with closes much higher. So you can see we're kind of working higher here. So and moving down, you do end up closing outside before you make that new low. So I like that second entry long possibility. We are below the EMA again, but when prices are swinging back and forth above and below the EMA, you generally don't have to worry as much about the support and resistance of the EMA, because if you do, you're not going to ever enter, because most of your trades are going to be short above the EMA and long below it. And that's just the way it is when you're in a range. That's how it works. So this has a very obvious range type feel, even though we still have an upward bias here. So when this works up, first entry, second entry, and both of them are holding above that EMA, and you get a bullish bar like that, I'm going to take that long. I really thought we'd take on off there, but it didn't. So easy scalp, and then it turns back down, and now you're working down. And then you kind of get a repeat pattern of what you had over here. Notice how we shot up and you shoot back down, you kind of go sideways and then take off. You shot up, shoot back down, you go sideways and you take off. So this is a repeat pattern here. And your bias is somewhat up, so you got to be careful. There is a failed second entry long here. You might have taken this short. Notice you're coming down first entry, pull back second entry, and but you got a little bit of support across there. That's a possibility. I don't think you could probably get in that one because it gapped over. Notice the gap right there, and it shoots down real quick. It's doubtful you would have got in that if you would have had to use a limit order. Would it have come back? I'm not sure. We'll mark it. But then when it bounces right here, now you're just looking for a higher low, which comes right here. The entry is actually, oops. Entry is actually right above that bar when this is your signal bar here. So when prices broke above that bar, you can go long right there. And that turned out to be a pretty nice trade. And you might have even got a runner off that one. So runs up, turns back down, and pull back. First entry, you come back to the midline. Second entry long right there at the key entry point. That's the first break of that. So we're liable to run back up there again. And sure enough, it does. So I like that one just because it bounced off that midline. Notice what happens the next time it comes on through. And you get a first entry long right there. But counting from the lows, first entry, second entry. It's a second entry short. It's not a great signal bar. And you wouldn't have probably had this midline in here yet because you wouldn't have found this range yet. You'd still be playing. But you're looking to go, if it holds right here or it breaks lower, we're probably headed to the other side. So this one could easily be green just because it's still a really bearish bar. There's a lot of stem up here, but there's still 3 ticks or so of stem in there. So it's not a great signal bar. But you can look at this as a failed second entry long, and then you don't care about the signal bar. So that's why, you could justify it being red for that. But notice how you're working down. Oops. You're coming down, first entry long, you're pulling back. There's a second entry long there. It comes back to the EMA, fails and turns down, and it turns down on a second entry short. Notice that low, first entry. When it broke below there, this bar, when it broke below that, that's a second entry short. And I would look for a possible another leg like this, but you would expect it to bounce here off the trend line, and it does. And so you really just need a higher low here, which you get, but look how bearish that bar is. I mean, you could actually, if it wasn't for that little 2-bar matching high right there, I'd say you might even take that trade back. Generally, you're better off to wait on that higher low, and it's too bearish. And then you get a failed second entry short here when it turns down and turns back up. But we're really just kind of going sideways here. Finally, we broke down here and made a perfect double bottom, and you get a fairly bearish bar on a second entry long. Notice that high, pull back first entry, pull back second entry when it broke above that bar. So you might take that one, but honestly, I think you just need to stay out of that and wait on the higher low, and you don't get that till way up here, and it's too bearish. It's right into the EMA. It would have worked, but it's just not a very good setup. You do get a second entry short right here. Notice you're working up first entry, second entry, but we're not back to the highs yet. We do have a break of this little short-term trend line, move to a new high, but I'd want to wait on a lower high here, and that doesn't come till here. And then you're just, you're back above the EMA. You still haven't gotten back up here. It would have worked, and that's another one you might argue for to be green. You could look at this as a first entry, and if it would have broke lower, I would have liked it better. But there technically is a second entry long there that fails and turns down. So you could argue for that one. But the fact that you really, and you could be considering this as a range. You might could find this now because you got these two. It fits right across here, and your midline's fitting across there, and you can see prices working it. So, but if that's the case, you got to make sure you got enough to get out before you go here. So, I still would probably make that one green and not red. It's a little bit aggressive. I still wasn't really sold on this thing being a range until it turned down again right here. Just wasn't 100% sure. You had to be thinking that, but this trend line's still holding every time, so eventually it may break through there, but in the end, You can see we just kind of get stuck trying to get through this midline, and it bounces up there one more time, and it makes that little trap and then takes off. But anyway, you're working sideways here. Really, I would just stay out of this. It's pretty obvious that there's some strong support here, so when it fails and you get a chance to go long with a nice bullish bar at the very low there, you may take that one, but it's not back to the trend line yet, and I would expect it to come back there. We do make a higher low here. A lot of stem on that one. Right back into the midline, right into the EMA. It's really sideways now. So this is looking like a trading range. And actually, you might have even if you didn't see the bigger one yet, you could see this one. And you can see how that's kind of acting as support and resistance right there. And this is acting as support and resistance. So, but notice what happens. You try to go lower once, twice. That's a failed second entry short. That's a bullish bar back inside and above the EMA with enough room to get out before here. And we're probably headed up here. And off it goes. That turns out to be a nice trade. I marked that one blue because by this time it was starting to be obvious what was probably going on. And most people should have probably found this by now. If you're good at, I mean, if you've been doing this a while, if you're fairly new, you may not have ever found this sideways range here. So, but if you've been doing this a while and you start drawing your lines, I mean, sometimes you don't see it till you draw your lines. As you get better and better at this, you'll start to see this stuff without even putting your lines on there. But it, it takes a little while. So we work back up, we get a break, move to a new high, big bearish bar, and that's what you want. And you've got a double top here, and then you got a double test of that. So it actually went higher and turns and comes out the other side. But you could have waited on this one, let it break lower, and dropped you a limit order, or you could just put a sell stop there. That's bearish enough, and you're still got a ways back to the EMA, and you're probably at least coming back there, and you're probably coming to the midline, and you may even come here, and that's, it comes to the midline. Notice, even though it's going lower, it still bounces at that midline. That's what happens. But notice what's happening. It's making lower highs each time, so that's a clue that we could go lower. So that gets you into the 2 o'clock hour. I don't see anything in there that I'd be willing to risk, especially with that big. That's a perfect doji basically right there. It might be one tick off, but I believe that's a perfect doji, meaning it closed right in the middle. That's a 1-bar trading range. And so neither the bulls or the bears won out there. It's just like a little 1-bar trading range. And you can see we got one up, down. Then we got a real neutral bar. Then you got one up, then one down, one up, one down. Another neutral bar. That's definitely a doji. Another neutral bar. We just got stuck. We couldn't go. Nobody was willing to buy it, but they couldn't get through this support right here until finally it breaks through and the bottom just falls out. And you'll see that a lot of times. It'll shoot through the support area, came back and tested it, and even tried to go lower. And they just trap a bunch of people that don't know that you can't be going short way down here that far away from the EMA, especially when you've been in a trading range. Because it's just a matter of a few moments that we're probably coming back to it. And there you go. And then we shoot through the other side, and people are probably chasing it all the way up here, jumping in. And guess what? Just by the time they get in, off it goes, and they all got to exit again. And that's what happened. So, yeah, it was a 2-tier channel working higher that just turned into a trading range. And this is not a big trading range. 27.95 to, I'd call that 28.03. So what's that, 8 points? So not a big range to play with at all. I mean, you're not going to get a big trend out of that. So only a handful of trades today. There's still a good many. 1, 2, 3, 4, 5, 6, 7, 8. That's still plenty of trades, plus 1, 2, 3, 4 green. And there's probably some others in there you could argue for green, depending on how you were looking at it. But anyway, not the best trading day, not the worst trading day. So we just need to be able to find a couple of good 3 trades a day, and we're good to go. And we found that here today. You had to be patient. And that's the key to this whole thing, day trading, is being patient. Because if you're not patient, you'll get whipsawed. I mean, especially when it starts doing this, you might take the first good trade, but if it doesn't do what you were expecting it to and it keeps whipping like that all through here, you just almost better off to stay out. So that could probably wipe out that trade right there. And maybe even this trade right here. But at this point, you were still really playing the range, so you would expect it to go higher. But once it's not going higher and it's not going lower either, and we're just stuck in the middle, you can see it. You can see it playing off of this line. You can see it playing off of that midline. Notice how it's closing and touching, and it's acting support resistance, and it's playing off that line. I mean, it gets tough in there. You don't know which line's going to hold and which one's not. And like I said, you're better off just to stay out and look for something short off the highs or long off the lows. And you don't get many opportunities down here, and you only get one up here. So makes it for a tough day. So again, when it's like this, of course, a failed break lower can sometimes pay off. And of course, this was somewhat of a short trap with enough room, even if you're playing this little tight range here. So so that one's probably okay, but past that, I'd stay out of this stuff right here. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. At this point, I will be working tomorrow, and I'm not sure about Thursday. I'm definitely will not be working Friday, and I may take tomorrow off. As I talked about yesterday, spring break, my kids are out of school, and they're wanting me to take them somewhere. So I'm not sure what day we're leaving yet. So anyway, if I'm here Thursday, I'll be trading some, and I'll do a chart lesson and the whole bit. But I'm just not sure yet. But I'll probably know by tomorrow. Anyway, I'm going to wrap it up. We'll be back again to do it tomorrow, Wednesday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.